For me, innovation is a process. It's not an outcome. So it's something you need to keep working on. And big innovation happens from sometimes the smallest ideas. The smallest change give the biggest results. And sometimes large innovation projects don't necessarily deliver what they're promised. But I think net, you got to keep on innovating, which means just keep on trying new things. Don't worry about, failing fast. That's a good thing, but do it in the right environment. Obviously, risk comes first. So make sure we're doing it in a, proper, secure, risk managed way, but always try new things because the next, evolution of finance will come from an innovative idea from someone.
Welcome to Pioneers, the show where we explore the intersection between humanity and AI. I'm your host, Ankur Patel. Over the last 10 years, I've built 3 AI startups, written 2 books about the subject, and I run a weekly AI newsletter. I also regularly teach and speak about the topic at conferences. This technology has grown faster than I think any of us could have imagined, and it's making us ask really important questions, such as how ethical is AI? What will this technology look like in a few years, let alone a few months? And most importantly, does it have the power to truly change the world? And what does it mean for you? On this show, I'll be interviewing the founders, operators, and pioneers that are introducing AI into their companies and industries. We'll be asking them the really heavy-hitting questions that make them dig deep into the core of what we do. And without further ado, let's dive into today's episode. Welcome back to Pioneers. I'm your host, Ankur Patel, and today we're exploring how major banks are embracing FinTech, not just cautiously, but strategically. We're joined by Malcolm Jussawalla, a FinTech leader and innovation strategist at TD Bank, where he plays a key role in shaping partnerships, de-risking innovation, and building bridges between startups and one of North America's largest financial institutions. Malcolm brings a unique lens. He's worked across business and technology roles at TD for over 15 years, started companies himself, and now sits at the center of TD's FinTech ecosystem. Malcolm, welcome to Pioneers. It's really great to have you here.
Thank you very much, Ankur. Really appreciate you having me.
So you've been at TD now for over a decade, but you also have entrepreneurial experience. How has that shaped the way you approach FinTech partnerships today?
Yeah, I think my experience both in the corporate world, but also in the entrepreneurial world has given me a broad basis of empathy. Really, can you empathize with the founder, with the startup executive, and as well as the bank executives, and really try and combine their 2 thought processes and figure out how to best bring them together in a place where we can actually have innovation and actually develop value for us as a bank, but also the ecosystem as a whole.
Maybe let's also take a step back and think about the role you play at TD, right? So when a newer startup or even a scaled startup comes to TD, maybe with a desire to partner with the institution, where do you fit in? What role do you play there?
Yeah, so I'm part of what we would call a center of excellence at the bank. So really be kind of that conduit between the organization as a whole. So TD is, as you mentioned, one of the largest financial institutions in the world. We have business segments in Canada, US, and globally. And each business is run as a federated model. So the leaders would lead forward and develop and deliver their strategy. And so what we as a center of excellence would do is connect the ecosystem with the various lines of business. So on one hand, we understand the needs of the segments and the businesses, and then see how FinTech can play. So where can FinTech fill a key gap in their strategy? And so we then go out to the market. We meet with a lot of FinTech. We do everything from a marketplace scan to in-depth due diligence to developing a partnership proposal and strategy, all the way to FinTech investments. So our team then handles everything from the FinTech bank relationship. And also on the FinTech side, we act as a point of contact. So we allow them to, work with us and we help them navigate the bank to ensure they're meeting with the right people at the right time and bringing the right problems and right solutions to the right problems.
I think it's been so valuable having you play that role in some of the conversations we've had, right? And I think with a very large financial institution, it's very hard because it's not a straightforward process. You have to go through many hoops, right, to talk to relevant people, the business side that have the problems. But you have to go through everything from technology reviews, infosec reviews, procurement, finance, legal, the whole gamut. And so it is a pretty daunting, very lengthy, and very complex process. And so I think from a fintech's perspective, I think what you do is deeply valuable. And I imagine that's really valuable to the bank as well, because they have day jobs, right, to do.
Yeah.
They're not chatting with many startups and getting a lay of the land and trying to figure out who to bring in. And so I think in some ways, like, you kind of are really the most incredible matchmaker, both for fintechs and the bank at large, to make sure the right connections happen, right? So there's value derived for the bank at large.
Yeah, absolutely. I think you explained it really well. Definitely the fintech leaders see value in what we do, so we can help them navigate the bank not only from a service provider perspective, but also potentially we can help them figure out, is there someone in the organization that can meet their banking needs, both as a business as well as a personal entrepreneur. So, having, people like me and, whether it's TD or other organizations, is valuable for the ecosystem as a whole and the individual players within that ecosystem to navigate the bank. So they're not, wasting their time or the bank's time, pitching to the wrong people with the wrong message.
Let's talk a little bit more about this federated model. So how does that work, from maybe sharing learnings and notes from the field around, these are trends to be aware of, these are the startups to go and potentially partner with? Because at some point, I imagine that kind of information capture and the learnings need to be disseminated with the larger institution at large.
Absolutely. So one of the key functions our group does is the sensing function. So we love to meet with entrepreneurs, venture capitalists, accelerators, and other people in the ecosystem to really understand what's happening. What are the emerging trends? We then, summarize that and, really translate that to what that means for TD strategy. So TD strategy, as I mentioned, is federated. So you have the corporate strategy at the top, but then you have each business segment driving their own pieces. So we definitely meet with the business leaders, but we also share broadly what are some of the emerging trends, which may not quite fit into the various lines of business. And then, of course, there are other enterprise functions that we work with that are centers of excellence as well in various capacities. So we would work with them to be able to provide the best opportunity for TD to understand what's going out there in the marketplace that allows us to inform the right decision leaders on what strategies they should be thinking about.
And when it comes to doing RFP processes and running POCs to go and evaluate vendors, does that sit with you, or does that get handed off to the business units? Curious about that, because I think you want to be able to experiment very quickly, but then at some point you do need to have the baton handed off, right, to the larger organization. So I'm just curious, sort of like, how long do you stay involved in that journey at large?
Yeah, I think that it varies on, the fintech and the business line. So sometimes we hand it off early on in the process. We provide a service, let's say, just scoping out fintech that meet a very specific need. And so sometimes we'll do a market scan, send that to the business, and the business takes it from there. Other times we're more engaged. So some businesses ask us to actually help draft and negotiate, a referral agreement, for example, that kind of partnership agreement. So it really depends on the capacity and the available resources on the business side, as well as what we have. There are some pieces that we like to connect the dots with. So since we sit at the enterprise level, we're able to connect the dots across multiple lines of business. And so we might see opportunities, let's say, across our Canadian banking businesses, but also in the wealth business or insurance or the US banking business. So our team is uniquely positioned to see the connection points. And in those certain circumstances, it makes sense for us to continue to be involved, to drive those strategic conversations, to see if there's this unified approach to working with various fintech.
In many ways, it feels like the last 2 years have been super fast in terms of innovations coming online, as well as what I'd call very large financial institutions like TD experimenting, getting their hands on it. In some ways, like, the adoption cycle has gotten more compressed. And the technology cycle has also gotten more compressed in the sense that you're getting more things that have come online very quickly, get adopted, get scaled in ways that perhaps we didn't see in previous cycles. Part of that just could be availability of knowledge. Part of it could also just be that AI itself is an incredible tool to build and experiment and learn from. So I'm curious, like, as an individual and as a team, like the Center of Excellence at TD, how do you stay on top of all of the things are happening super fast around AI and agentic AI, which I suppose are some of the hottest topics today when it comes to new technology trends.
Yeah, so there's definitely, I would say, the early trends that we all observe, and then I would say there are the trends that are coming to reality. And so you touched upon some of them, like AI, that have now become reality. And so the bank, we're fortunate to be structured in a way that, some of the early signals, we have teams like ours take a look at it, do a report. So, in the past, I've done similar reports. I've done one on privacy preserved data, which is an emerging trend, which is not very exciting to most people, but it's something that could be very critical to bank partnerships in the future. But then you see other trends like AI, where the adoption's really gone forward at an accelerated rate. And in those situations, there are larger organizations within our bank set up to specifically deliver on AI. So we have centers of excellence for AI. TD was one of the first banks to get into the AI space. We acquired Layer 6, in the around 2017-18 time period. So it's something that's been on our radar for a while, and definitely we acted on it. And we have the right people and the right expertise within the organization to handle those emerging trends and do different experimentation. So we're fortunate that our team doesn't have to do everything, because we're in a large organization that has many experts across many fields that we can rely on and work as a team to figure out what this means for the bank as a whole.
Every bank talks about risk, but you've said TD has a very structured approach. How do you balance risk and innovation in practice?
Yeah, so at TD, everyone's a risk manager. So from the CEO down to every employee, they are all there to manage the risk for the bank. And so what that means is everything that they touch, everything they do, risk is number one in mind. And that allows us as an organization to handle risk at a very structured manner. And so we have, of course, the front line, which is like every employee kind of touching the projects and the day-to-day operations. But then also we have our control partners that are sitting at the next level up. So those are things such as audits, fraud, AML, et cetera, that sit at the next level. And then, of course, we have our audit function. So anything that we do at the bank, it goes through a rigorous risk profile.
Can you share the kinds of risks that are unique to fintech partnerships, especially with startups or early scale players?
Yeah, absolutely. I think fintech, especially the novel earlier stage companies, introduce risks that may not be present in more established companies. And so some of them include the key man risk. So the key personnel within the organization, how much of their input and their day-to-day activities is contributing to the value of the organization. So if it's someone that has a very unique language or knowledge in a certain space, and it's a very small team, that's a potential risk that we may not have with a larger organization we may work with. Other risks that come in are financial stability. So many of these companies are not yet cash flow positive. Some of the more novel ones continuously need more and more capital to grow and to keep going. So that's one of the things we want to make sure is the people that we work with have a good financial backing through strong investors, as well as, path to cash flow, being cash flow positive. And a third risk is just, the brand and reputation risk. Of course, that's done with everyone, but we want to know, who the people are we're working with, what is the brand, out there with the brand reputation of that company, but also the individuals, the key people in the organization, who are they and what's their reputational risk as an overall organization.
I imagine that in your role, you come across so many companies in any given category. So when it comes time to make a choice, right, around which set of vendors to potentially put on a short list and move forward in some capacity with the bank at large, now how do you evaluate these potential fintech partners? Is there a framework or set of principles that you use?
Yeah, so I'd say there would be it's a match between what the fintech can offer and what the business needs are. And so that's, I would say, the key place to start is to understand what are the strategic gaps that we're trying to resolve, and then find the fintech that could match it. And then you kind of can go to the next layer down. Okay, once you find there's a problem solution fit, is there a technology fit? Is there any red flags or issues within the technology stack that we need to be considering early on? If that all passes, then it's really a matter of, okay, how do they stack against other opportunities, like other vendors that might be out there? And then, of course, we have our standard, RFI process and the gating through our sourcing teams to make sure we're evaluating the companies correct way.
When it comes to working with startups, right? You mentioned that the business has a set of problems, they articulate them, then you're basically scouting in some ways the companies that kind of fit that mold. What sort of ROI is enabling for these business units? And maybe I'll kind of put two lenses, right? I think at least around AI, there's one lens, which is it's going to enhance productivity. It's going to make operations more efficient. And therefore, it's the ultimate like cost reduction play. You're moving maybe people cost, kind of going and whittling that down some, and technology is kind of filling the void, right? So you're able to do more with the fewer set of people, even, right? Or if you're growing, then you could do more volume with the same set of people. That's more on just reducing operating expense and such. But I think that there's another paradigm that's emerging, which is AI is not just a cost reduction play. It is really a competitive play, which is, can you deliver even better customer experiences? Can you have best chances of winning on new opportunities, let's say for lending and such? And so it ends up being more about shaping the product and services that TD offers so they become better and stronger over time. And it becomes more of a growth lever as opposed to just a cost reduction lever. And so maybe those are just two frames of the world. But I'm curious, from the conversations you have with the various business units, which levers or which maybe sources of ROI are they most keen on as they pursue these partnerships?
Yeah, I think it's at this point, it's like everything, right? Like there are different strategic goals for each business and there are different capability opportunities. Like what are some areas that we could be doing better? I would say the three main ones that you touched upon, couple, is like kind of, is there expense avoidance or reduction opportunities? There's obviously the growth opportunities, like is there new revenue streams we can get through better understanding of risk or better understanding of our customer base, better flow through of our sales pipelines and sales funnels. But I think there's also that customer experience play too. How can we improve the customer experience for our businesses so that the customer actually finds that the ability to get things done with TD is better than the competitors? So the focus on customer experience is actually critical for us, and we put the customer at the center of all our decisions. And that allows us to think about things from the viewpoint of what they're going to go through in their journeys as it gets through either, getting a new product with the bank or servicing an existing product or getting the advice that they need.
What about the importance of relationships and trust with software vendors that you work with, right? Because one worldview is that software, you get software built out, you put it in the hands of a big bank, they kind of take it and do what they need to. And that's very like arm's length, kind of go and just use what's kind of given as part of the software and kind of run with it. Another worldview is that a lot of software involves still people, right? Relationships and trust. Like you need to be able to know that there is going to be a team on the other side that if you have an issue, right, that you can reach someone and they can help you. And the other part of it is that given how new software is really around AI, you want to make sure that that partner that you work with is able to drive real value. So be there to deliver really great outcomes, not just kind of push forth the software and then kind of have you do the rest of it, leaving perhaps like a little bit too much ground to cover, right? So I'm curious, when you have these partnerships, do you kind of have a little bit of both, which tend to work better for the bank at large?
Yeah, so for me, I really focus more on the deeper relationships as a partnership rather than a transactional vendor type relationship. So certainly FinTech could fall under both, right? They could be a simple service provider, provide, like a SaaS model, a subscription, and that's it. Other times it's more solutioning together. It's white labeling integration. So the experience is seamless for the customer. And so, I tend to work more on the ones that we want to build a deeper relationship. And, as I mentioned, we want to make sure there's the right touch points, not only within one business, but across business lines, because TD being, a very large organization has multiple people who could potentially benefit from, working with that particular FinTech. So I focus more on the, latter where it's more relationship building and ensuring there's a win-win for the FinTech as well as us.
When it comes to AI, one thing that we see very large enterprises struggle with at first is, what to build at home, right, within the bank on their own versus where to partner with startups that basically live and breathe this day in and day out. And I think it is a hard choice because I think a lot of engineering teams want to work with AI. They want to get their hands on it. They want to learn from it. They may feel that some of the use cases around AI are so sensitive to the institution that it makes sense to do homegrown versus try to go and take a bet or flyer on a vendor, right? Like, what if that vendor isn't the right partner? What if they're not end cycles ahead? And so when it comes to going and partnering with fintechs, how do you navigate those waters where the engineering team perhaps may want to build on their own, and the business is like, hey, I realize that the engineering team wants to build on their own, but we also just need to go and solve for this, and I'm not sure if we have necessarily the bandwidth, or we haven't gotten the solution that we need in time.
Mm-hmm.
So how do you kind of navigate those conversations with the different stakeholders?
Yeah, so that's you're driving at one of the key issues that many large organizations have, is whether to build something or to buy it, or to pull it from partner with the ecosystem. And so those discussions are ongoing, and sometimes together, right? So sometimes we're looking at a fintech, but also saying, is this something that we can deliver internally? Other times we see that the value that the fintech's able to create. So a lot of the startups can actually develop a lot of the product really quickly because they're not restrained with a large customer base that they have to serve. They can start from zero and build a product that meets a specific need. And for a big organization to do the exact same thing may not be financially feasible. All right. So if you're trying to build a feature which is important but would cost too much, it allows us to see, okay, what are the business opportunities we're saying no to because there's no way for us to build it. A partnership might make much more sense because something's already built. We can pull it from the ecosystem, partner with the right team, even white label the solution such that the end customer sees it as a seamless experience. More of like the closer a fintech tries to get to the core of any business, the more we'll, not just us, but like any large organization will gravitate towards building themselves. So what's a unique differentiator for the organization versus not, right? So if it's a unique differentiator, you're more likely going to see people erring towards building, versus if it's more adjacent, you'll see more openness to partner, because the risk, once again, going back to the risk conversation, the risk is better understood when we do everything in-house versus not. But then you get the benefits of speed, scale, and product feature set, which you may not be able to do internally. So that balancing act is continuous, and that basically is one of the reasons why we're risk managers first.
Yeah. And I love that. I love the way you broke it down, right? It's like there is a set of trade-offs. It's never a clear decision. And I've developed much more empathy for buyers. So people at financial institutions, like, it's a very hard choice. Like you're taking a risk or a bet either way, and it's not always very clear, right? And I think one of the things that you have to do and protect is like, what happens if this doesn't work out, right? Like, or what happens if it does work out, and for a variety of reasons, the startup isn't viable, like it goes out of business, like the whole host of things that happen, especially working with early stage companies. And I think what we've seen a lot more is that there is like this buy to build faster, which is startups can bring a lot of capabilities, a very rich feature sets. They innovate because they're spending all their time, attention, and dollars on building out that one thing that is massively enabling for financial institutions. But then financial institutions, even though they're in similar businesses, like most broadly speaking, the way they actually do work is very different. They have a different stack. They have a different set of use cases and workflows and how they're all put together. And so there's always going to be some last mile work that has to get done, and that's never going to go away. And that's like what you want to keep the engineering teams focused on, is that they're getting that fit done in the ways that their institution works. But if there's a way to go and not reinvent the wheel, especially if the wheel isn't that differentiated or isn't like there's no secret sauce in that necessarily for the bank, then software vendors kind of fill that void, right? But then they still have the hard choices of figuring out which software vendor, put them through the ringer. You got to make sure that they're viable, like both technology product, but then just financial viability, right? And so all these things have to come together. So that's why it takes so long to go as a startup to go and sell into a larger organization. Like, they put you through the necessary hoops because they want to make sure that you could survive through all of that pain in some ways, that you can make it out to the other side.
Yeah, and there's a lot of steps. So definitely a large bank has many leaders and many parts of the organization that need to come together and be supportive and be able to deliver on end product that goes to the market. So everything from the business leader, the technology leaders, to the innovation side, making sure the customer experience is right. Our frontline colleagues are able to handle what that means, right? So even if you introduce one change to the website, for example, just a simple public site, that could drive significant call volume to the contact center. And so now imagine if you're trying to deploy a new application, new service, how are you gonna sustain it across millions of customers? That's one of the I think that's one of the challenges that many fintech don't quite understand, right? So they want to work with a big organization, a big bank. Do they really understand what that means in terms of their volume? So it's great to get massive growth, absolutely, but there's also massive responsibility that comes with that. How are we going to service that customer? What happens, problem resolution? How are you going to resolve things in the SLA that the bank requires? And so those are all some of the challenges that fintech sometimes overlook or don't pay enough attention to early on. And it's one of the things, when I meet with a fintech, I mention, it's a long process. We want to make sure you're connected to the right people, but there'll be a lot of steps just because there's a lot of things that a bank needs to do to deliver great products and service to the market, but also make sure we're compliant.
Yeah, that's exactly right. Anything, especially that is customer facing, the bar for being good and viable for use in production is really high.
Yeah.
It's one of the reasons why I think we see more internal use cases often, although I think the most value add are those customer facing use cases because that's where the biggest growth levers are, right? So you kind of need to have a mixture, but you need to do it in a way that's measured, and the fintechs need to have visibility in what it really takes to serve a very large bank and the set of problems that are unique to that bank, right? And unique to other, not unique, but prevalent at the industry at large, just given the scale of operations.
Yeah, and each bank is different, right? So every bank will have a varying degree of different priorities, different problems they want to solve, different businesses that they're in, right? So it's important for any fintech to understand the bank as a whole and to figure out, where they could fit and what value they could bring to that individual bank.
So you've worn a lot of different hats over the course of your career: engineer, consultant, business executive, founder. And how does that multi-lens perspective help you in your current work?
Yeah, absolutely. I could see things, I think, from a unique perspective. So I've seen it from a technology perspective at the bank, from a business perspective at the bank, but also through the lens of an entrepreneur, as you said, and leading startups. So that allows you to see the same problem from different lenses. And that allows you to think of a way to bridge the gap sometimes in the conversation to help the businesses see the potential of what a partnership opportunity could look like with fintech, and help with the fintech to understand, why there's so many meetings, why there's so many people that need to review and ensure that there's a, proper product market fit, but also meets all our, risk requirements. So, but being able to see things from different lenses allows you to work with the various parties and, navigate through the challenges that naturally will occur as you kind of go through a large partnership opportunity.
Yeah, you're able to have those conversations with different individuals within the bank and speak their language, right? Because you understand the world that they occupy. Like a business executive views the world differently, even if you're talking about the same thing like AI or an AI startup that is fintech, right? Versus like a technical leader or technical manager. And so I think we're able to communicate to different stakeholders given their like worldview and frame, because you've seen so many frames yourself, I think makes a huge difference, I imagine.
Yeah, it does. It absolutely does. And like when I said earlier, like empathy is like one of the key things that, my experience has brought me, is to say, like, you can really understand what the business leader is thinking, the technology leader is thinking, as well as the tech entrepreneur. So being able to put yourself in their shoes, their positions, allows you to have a better opportunity to see a better solution for the organization, but also the fintech and the ecosystem.
You've said your goal is to create a triple win for TD, for the fintech, and for the ecosystem. What does that look like when it works?
Yeah, I think it's when we as an organization either get a capability gap or new business opportunity fulfilled with the partnership of the fintech. The fintech meets their growth objectives. They are kind of on a trajectory to grow. They want to be able to hire people and develop new products and services. And I think the ecosystem then benefits because net you see more growth in the fintech space, which only allows creation of more businesses, more startups, more fintech that eventually TD as a bank will be beneficiary to see down the road. So I think by us doing more partnerships, it allows the ecosystem to grow and as well as meet the immediate needs of the bank as well as the fintech. And what, part of what our role is to not only, meet the business objectives of the bank, but also make sure there's a healthy ecosystem for us to, work with for, decades to come.
For founders listening in, what are the biggest mistakes fintechs make when trying to work with a bank like TD?
Yeah, I think the number one is like not talking to the right person and bringing the right solution to the right problem. And so definitely a lot of the fintech entrepreneurs are passionate about their product, they're passionate about their idea, but they may not have taken the time to understand what the business attributes are, what's specifically unique about TD versus another bank, what businesses are they in, what are their priorities. So spending some time understanding that first, and then trying to explain how their solution can actually address the pain points would go a long way. So that's one thing that I notice a lot of fintech do. They kind of give a generic presentation. The second thing is they're not fully understanding how big the organization is, where, in a startup world, you can basically are talking to a decision maker or one removed from a decision maker. At a large organization, the decision maker will sit in multiple places because the decision isn't a single person's to make. It's actually a multiple people need to be aligned. So everything from the product side to the technology side to the day two operations all need to be aligned before we move ahead with things. So things take longer. There are a lot of people to go through. So working with teams such as ours is a great way for the fintech to not, get kind of lost in that large web of people and groups to meet. So those are, I'd say, the top two. The third one, I think, is making sure you have enough capacity to be ready for it. So definitely the due diligence process is long and a lot of questions. The tech review cycles are long. A good rule of thumb is I tell a lot of startups and fintechs to say, if you don't have one full-time person that could be dedicated to working this out, you may be too early. You may not have the capacity yet to do it. And I've actually, part of what I do is to make sure that the companies are on the right trajectory for themselves as well. So oftentimes I'll say, hey, you're early on. It sounds like you have an interesting proposition. Why don't you come back, let's say in 6 months, once you've meet certain milestones, you've gained some more traction with your customers, you've, flushed your product out a bit more, and then come back to see if there's a potential opportunity. And so I think people sometimes underestimate the amount of work it takes to actually work with a big bank. A potentially huge reward, but it's a lot of work going through the process. But also, if you're successful and working with the bank, it's a lot of work day two just to make sure we're maintaining the operational service level that's expected. Our clients are happy, and there's any incidences are taken care of in a timely manner.
I completely agree with that, and I think the priorities piece that you mentioned, like understanding what the priorities of that particular bank are, right? What's motivating for them? What's their experience been with X technology? Let's say it's AI, whatever it might be. Where are they in the buying journey, right? These things change also over time. Like if you said this, like had that same set of questions 2 years ago versus a year ago versus now, things change, right? Like it happens like more quickly than in some cases like people realize. And so, and part of it is just like being aware of that, asking those questions, like doing the necessary diligence and discovery, and just again building a relationship, right? Ultimately, it's so much driven by trust and relationships. Because if you don't really understand the other parties, like their frame and worldviews, what's important to them, what they've tried, what they're inclined to maybe try more of, or what directions they'd like to take, you really can't have a conversation. You're having a one-way conversation otherwise, right? And so a lot of that resonates.
Yeah.
I think the other big thing is there's this kind of trend in Silicon Valley, which is having a single person $1 billion startup. And in some ways, like I think that's possible in consumer technology, right? Where it's like you have something self-serve, it explodes, there's a lot of viral word of mouth, but there's just it's impossible in doing something like as complex as like enterprise fintech, selling into a large organization. As it's funny you said this, but it's like the diligence process itself, going through all of that is at least one full-time employee, right? It's like it's a dedicated person. And in some ways, like it's not even one full-time person, because the skill set to go and bridge the entire gap from infosec to technology to going through legal and going through it's you need a handful of bodies each that have a dedicated portion of their time spent just on going through these. And if you don't have that, you're just not ready to sell into large enterprise.
Yeah, absolutely. And I've actually given this advice to many fintech where it's saying, hey, this is going to be a long process. You're just getting started. This is what you should probably do. Focus on developing, go, B2C first, right? Like you don't necessarily have to go through a big bank to scale your product. You can actually get users onboarded today, get people to try it out, understand what's wrong, where you can improve. And then once you have that, traction, you can actually then come back with real data to share with us. That actually helps us understand how much of this, the solution you can actually offer to the bank. And that's another thing. Like many fintech think they can do everything for us when in reality,
Yeah.
It's a large organization, many decision makers. We may only want one small component, but for us, that's going to have a huge impact on our customers or our business. But the fintech thinks they could do a lot more. So we may like to pick and choose which features or which capabilities we want from a particular fintech without having to buy necessarily the whole service catalog, right? So having a modular architecture probably works well for fintech who are looking to sell into large organizations because one bank may want one feature, another bank may want the other, right? So being able to do both actually works well. And I would say it's a process where the entrepreneur needs to try things out, build a business, have that product market fit, have some scale or early signs of scale before talking to a bank.
I think that all tracks. I think it's really important to go and basically offer up the items that are going to really solve the pain that the customer faces, right?
Mm-hmm.
And knowing what those things are and being able to crystallize the messaging around that and to showcase that, I think this is really important. Maybe kind of going and taking a step back, right? We're midway through 2025 now. And it happens to be AI. Agentic AI is kind of the buzzy thing today, but these things kind of come and go. A lot of it used to be crypto and blockchain. I think blockchain in some ways is making a massive comeback, particularly with stablecoin and such. And that's just another piece of technology, of course, alongside AI as well. But I'm curious, what are the fintech trends that you're most personally excited about right now?
Yeah, I think the fintech ecosystem as a whole is really exciting. I saw a paper, I think it was a BCG report that showed that the fintech ecosystem is expected to grow 30% year over the next 5 years. So that's a massive growth. It's going to be $1 trillion plus market before 2030 is here. So that to me is the most exciting thing to see. The amount of growth in this space is going to be probably bigger than anything we've seen since. And a lot of it may be fueled by AI, like you mentioned, blockchain and other technologies that are underlining it. But I think understanding what the application layer is going to be key. And part of what, my job is to kind of, understand what's a trend and what's the hype, right? And see what are the ones we need to really pay attention to and not. And within, a macro trend, there's different pieces. So within AI, there's obviously some great things happening, but there's also a lot of hype and fluff. And so understanding what is it that you're actually doing, like the number of AI startups. So when I started this role 3 years ago, blockchain was still kind of top of mind for everything. But, within half a year, everyone's an AI company. So you have to figure out, are they really an AI company and do they need to use AI or not, right? So sometimes AI is needed and sometimes it is, but like, what are you actually trying to do? And what's the buzzword versus the actual, the product and the benefit that we get out of it? And so part of my job is to figure out what's real, what's not. The blockchain crypto space, definitely I see great potential with, digital assets when it comes to tokenization from stable coins and the interesting things you could do with that, smart contracts to enable finance to work more efficiently or get some assets that are typically tied up in, non-liquid forms into liquid forms. There's some interesting things happening there. But at the same time, you see, 1,000 meme coins going off, ridiculous evaluations for no reason, right? So you have to kind of understand what's real, what's not. And, some of the biggest hype is in that space because it's easy to actually start a coin, right? And almost anyone and everyone has done it, it seems. But then understanding what the value is. So everything comes down to what problem are you solving? What's the use case? And, is it something that we as an organization can work with? And if it is, then there's an opportunity. If not, it's something that we might want to watch as a trend, or it could be something we just say, it's hype, we'll keep an eye on it, but nothing's really kind of going to come out of it.
How do you see Canada's fintech landscape evolving, and how does it compare to what's happening globally?
Yeah, and so the Canadian market, has a lot of similarities with the U.S. market and other global markets. I'd say the few unique attributes to Canada are we're one of the top countries in terms of net new immigration. So immigration is a key driver, a key strategic driver for the government of Canada. So it's been going on for a while. There's been changes in the levels, but structurally everyone agrees that immigration is good from political level, and definitely from a what we're seeing in the numbers, more and more Canadians are coming every year. So definitely the new to Canada growth brings people from other countries that may not be familiar with the Canadian banking system are now needing to get onboarded to the Canadian banking system, being able to send money home, like other attributes that come around with the new to Canada space. So I'd say that's one piece that's different. Another piece is the market dynamics are a bit different. So I believe the top five banks in the US represent about 25, maybe 25% of the entire market. In Canada, the top five are closer to 80, 85%, or closer to even 90, right? So you see the larger players here. And the benefits of that, I would say, is we've developed as a country certain utilities that have been here for a while. So Interac, for example, is a bank-to-bank payment network that's been established decades ago that is used for payments by most Canadians. Email money transfer, those types of digital transfer products were available in Canada before the US. So US, you had companies like Zelle had to come up with their product as a fintech rather than a industry utility that's funded by the bank. So it's a different dynamics. And of course, on that platform, on that network, you can do new products as well. So in Canada, we have utilities such as Interac, which provide a utility for payments for all Canadians. And on top of that infrastructure, you could build a verifiable credentials network. So in Canada, we've been able to adopt some of these technologies faster than some other markets, slower than others, but faster than maybe the American market where most of your listeners might be. But also that allows innovation in the digital space that will look different than what you might have in the US, where the US, you have a lot of different players trying different things. In Canada, you have maybe fewer players, but I would say a lot of the entrepreneurs are just as eager to build the next unicorn. So definitely a lot of good, solid entrepreneurs coming up with great ideas. The capital markets are better than they were, let's say, 20 years ago for the startup ecosystem. It's definitely not where the US is, but definitely growing there as well.
And to wrap, how would you describe your personal philosophy on innovation in one sentence?
Yeah, for me, innovation is a process. It's not an outcome. So it's something you need to keep working on. And big innovation happens from sometimes the smallest ideas. The smallest change give the biggest results. And sometimes large innovation projects don't necessarily deliver what they're promised. But I think net, you got to keep on innovating, which means just keep on trying new things. Don't worry about failing fast. That's a good thing, but do it in the right environment. Obviously, risk comes first, so make sure we're doing it in a proper, secure, risk managed way. But always try new things, because the next evolution of finance will come from an innovative idea from someone.
I absolutely agree, Malcolm. I think you always have to try and experiment. That's where the best learning happens. And while there may be mistakes that are made along the way, I think the net gain of being out there, testing, trying, learning, adopting, and kind of falling forward in many ways, really, really critical, especially with like very new inflection points like this around AI. So I want to thank you for joining us. I think you brought a lot of clarity and nuance to this conversation. I think it'll help a lot of founders, even bank leaders, understand what it really takes to partner, both from a fintech perspective as well as banks perspective, in order to drive real innovation that truly sticks. So appreciate that conversation. And to everyone listening, thanks for joining us. We look forward to seeing you on future episodes. And Malcolm, thank you once again for being on the show.
No, thank you very much.